Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Her website, jugglingdynamite.com. Welcome back to the show, Danielle.
Thanks, Jim.
The Canadian government will have a $343 billion deficit, a $1 trillion debt. Is this something we should be worried about?
Yeah, of course. It's going to be something that we're going to be working on for probably the next few decades, trying to get that debt repaid. But at this point, there isn't a lot of choice because, we are facing this massive global downturn, and the reality is that the more people we let slip out of, slip, for example, into homelessness or slip into, financial distress, the lasting implications we're going to have in social programs and the costs of that for, healthcare, mental health, children, social services, all that is such a negative impact on those many groups in our society. And so it's sort of a function of, this whole thing about defunding police is not really about defunding police or prosecution or upholding of the law. It's really about how do we direct finite resources into the areas which will cause us to have, less social strife over time. So you really have to figure out, okay, we only have so much money to spend. Where is it most productive in staving off the problems in a proactive way rather than always just addressing things after the fact? So I think in a way it's important because the extent of this hit from the pandemic shutdown coming at the end, as we've discussed before, of a decade-long gorging on credit, overspending, buying cheap goods from China, all these sort of secular themes really have come to an end in this pandemic. And I think it's behaviorally going to change for the foreseeable future for many years. And so it's not just about, a shutdown and we'll be opening back up and things will be back to normal. I think the future will be much different than the decade that we've come through. And it's difficult for people to envision how we're going to make our way from here. I'm sure we will. But I think that a whole bunch of new ideas are coming onto the table. Here's an interesting statistic. Of course, we know that we've had to do a lot of, the various income benefit programs, whether it's extended unemployment benefits, whether it's a CERB for people that lost income in Canada because of the pandemic, whether it's benefits for seniors or for students. There's so many different programs that are underway right now, and ultimately, the provinces look to the feds, the municipalities look to the provinces, so the deficits really move upstream, and the government of Canada is the one able presently to borrow funds at the cheapest possible rates. So it really makes sense that we kind of budget it from the top and filter the money down. But what's happening is epic and enormous. And I've mentioned before that we're going to see tax rates rise on all sorts of things, from consumption, higher consumption taxes through capital gains, through the highest marginal tax rates. It's all going up. Certainly the idea of a minimum guaranteed income is on the table again here, because essentially that's what CERB and these other programs have been. They've been a minimum amount per head that the government has allowed people sort of without questions to get them through this difficult time. But there's no question that idea of providing a minimum benefit is going to be up for review here on a nationwide scale. The PBO office, federal office, did a study trying to assess how much it would cost to provide everyone in Canada with a minimum basic income, and that would depend on where they live, as to what that actually entails, but something that would be, roughly say 10 to 16,000 a year per person, and how much such a program would cost. And the answer that they came up with was something like $92 billion a year. Well, you can see that with the deficits that we're running and the debt that we've got, $92 billion is relatively small. As a matter of fact, $60 billion was the subsidies that we gave to the oil industry in just 1 year, in 2015, as an example. The data is always released late, at a lag. But essentially, we give about, 60 billion or so to oil companies every year. We're talking about a nationwide program that would provide minimum income to households for about 92 billion. And the other side of that, of course, is that when you're paying that out, you can then look at a whole bunch of other programs that we're currently funding, including unemployment benefits and welfare and, disability plans and all these different things which have massive infrastructure, bureaucracy, overhead costs, administrative inefficiencies, all this. So there's savings to be had on many aspects when you can streamline it. And this is what I speak about with a lot of, I think, of the ideas going forward. We've had this whole period of complexity and opacity and, loopholes and enormous costs in trying to collect taxes, for example, because of all the complexity. I think we're likely to see much more sort of level, flat, simplified, but increased enforcement is really where the dollars need to go. Simplify the collection rules and systems, double down on enforcement, closing loopholes, closing tax evasion, closing offshore, evaders, all that sort of thing, and really go after where can we get the biggest bang for the buck. So that's on the collection side and revenue, but also on the spending side. Ultimately, we want people to have sort of basic shelter, food, and health care in Canada. And those are sort of the things that we tend to hold as values. No one wants to be stepping over children in the street, as you can in some countries, for example, in developing countries that don't have nearly the infrastructure. At the same time, of course, we don't want to take away the incentive to people to work. And the minimum basic income programs basically give the same amount to every single person. And you can then make money on top of that. And some people, of course, will, and they'll use it as a bonus, and they'll not be deterred one iota in their drive to work at their profession or their calling or their business. And other people may indeed not try and find work, but those people aren't finding work now, so we're funding them in all the various social programs in any event. So I think there's a lot of streamlining that needs to happen because we've only got so many dollars to go around. We all obviously can't keep adding $1 trillion of debt every year or every couple of years. And we really do need to focus on efficiency. So I think there's a lot of really good ideas that we can come to in this. They say that crisis is the mother of invention, and I think that's where we are today. Another interesting little tidbit, as stocks have rallied off the March bottom in the 3 months, at least into the first week of June. They topped out in the first week of June, and we haven't seen them make new highs yet, except for the NASDAQ, which is a separate technology story. But basically, I think the really telling aspect of that is that the bond yields, treasury bond yields, so Canada's 10-year treasury rate has fallen from 0.81 on March 23rd when the stock market bottomed to 0.53 today. So we have the lowest ever interest rates in Canada. That's 0.5 percentage point if you lock in money for 10 years or you buy a 10-year bond. So that's really quite mind-boggling. And what that really means is that the bond market sees deflation, slow growth, no V recovery in the economy. Even, the major economic organizations, forecasting organizations are suggesting that while we might see some people called back to work, we're likely to see unemployment rates into 2021 of about 8% in Canada and the U.S. So this problem of chronic widespread unemployment, of young people moving back in to live with parents. These are themes that are going to be with us for quite some time here.
We'll have more with Danielle Park right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia.
Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Danielle Park. Danielle, I know you're a well-paid person and perhaps don't feel that you have been put down, but we know statistically women do not make the same amount of money as men do for doing the same job. Is there an economic advantage to making sure people get equal pay for equal work?
Oh, absolutely. I mean, you talk about multiplier effect and low-hanging fruit. So ultimately, when everyone's talking about stimulus, how do we get stimulus into the economy? They mean, how do we create demand? How do we create customers, which drive the entire thing, right? Customers, I've mentioned this before. Customers drive demand, drive revenue, drive profits, drive everything in the economy. And what you need is to have more customers who can consume, not giving more and more and more to the same top 0.1% who ultimately don't consume more. You know, after they've got 6 houses and 12 cars, you can give them more and they'll pile it in the bank, but they're not going to consume more in the economy, and it gets a very inefficient multiplier effect. There's a negative, actually. There's no multiplier effect. So what you want to do is try and get more people in a ability to spend and save. And so the obvious place to look is, to make a equal pay for equal work scenario, whether that's based on race or based on sex or any other minority that is currently earning less than the standard or the male cohort or the white cohort or whatever the dominant, most highly paid section of that workforce is. So certainly when it comes to things like in Canada today, for example, women make something like 76 cents on the dollar for what males earning the same income. And when it comes to parents, women earn about 70 cents on the dollar compared to what even male parents are earning. When you get down into the different minority groups within the sexes, the pay disparity is even greater. So here's the thing. It's indefensible. So we need to get pay parity across the board, equal pay for equal work. It's a no-brainer. That will be very effective fiscal stimulus, which is desperately needed in the economy today. And it's just a question of, yes, it'll be a shifting. So some people will say, well, that's bad for corporate profits because now they're going to have to pay more. Yes, they're going to have to decide on an equal, fair basis, who in their workforce is getting the benefits or the income that they have allotted, the payroll budget that they have, how to disperse it effectively through their workforce. So it's essential that we do it. It's a no-brainer. And it's not about, your comments about me, I'm an outlier because I started practicing as a lawyer and fairly quickly into my career founded my own law firm where I was my own partner. And so my income wasn't at all linked to superiors above me. And then when I left and went into the finance business, I worked for a major institution for a few years, but then I also left and founded my own company and have been a partner in that firm for the last 17 years. So I did all that very much because I'm an entrepreneurial person, but also because I was a woman who wanted to have a family. And that was how I could balance and define my own hours and my own, risks and responsibilities, but also my own income. So yes, I think it's really important that we encourage women and all different diversity groups who want to work hard and contribute, that they will have the same opportunities and will be given the same shot that other people will.
We'll have more with Danielle Park right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Danielle Park. Danielle, both Canada and the U.S., because of the COVID crisis, have put limits on who can be evicted right now, but a lot of these limitations on evictions are about to run out or will this fall. What kind of pressure is that going to put on landlords, on tenants? There's a lot happening in this space.
There is a ton. This is a huge part of the economy. It is a huge part of the social fabric. The necessity to have a roof over one's head is basic and across the board, right? So the fact that we have such distress in this highly levered asset market, where income is required to pay one's, whether it's their mortgage or whether it's their rent. And those paying rent typically are paying to people who have mortgages. And many of those people that have mortgages are paying them to investors, or rents are going to investors. So this is something that really cuts across the board, whether you're a renter or a homeowner or an investor. And all of them have been on a major expansionary phase over the last decade because of low rates. Because, there was a big flooding of capital into the housing market, because it was made very easy for people to buy real estate. You had a lot of, as we've discussed before, the vacation rentals, the Airbnbs of the world were really driving investment capital into this space to make these properties not available necessarily to working people or regular people in the community, but to travelers and to periodic rentals and this sort of thing. And so it really reduced the supply available on the market for regular folks, and it drove up rents across the board. Now, that was all great while it was working for the investor class who were collecting the rents, both in the commercial space and in the residential space. There was a lot of funds and ETFs and private equity money that was pouring into that in the era of low yields, because they could get, what they thought is higher income there. So now that's really all unraveling. And again, when I go back to what do we have, focus, our priority has to be to keep people from being evicted, because we know statistically from all the studies that once you've got people living in cars or on the street, you really have a catastrophic impact for years thereafter on both their ability to earn, their children, the health costs that come from that. It's a very negative vortex once you start that. So you have to keep people somehow living in a place that's, safe and healthy for them. And so I think this is where we come back to, how long is this? First of all, the idea was just defer the rents, and that'll be enough, because by September people will be back to work and paying the rents. I always thought that was problematic, because as I pointed out, that missing income piece, even with all the government programs, Canadians were missing 20% of their normal income stream over the past, few months. And then if you look at classes 18 to 34-year-olds, that group, 67% of that group lost employment and income because of the pandemic shutdown. So if you're looking at, that tends to be a large cohort of renters in the population, and they're just not able. So you get a massive spike up in people moving back home to live with other relatives. So that's part of why people are moving out of rental accommodation. Secondly, you've got the Airbnb phenomenon, where traveling has just come to a grinded halt. It's funny, I was driving around near where I live today. I was aware of several properties that were renovated in the last few years for these Airbnb-style rentals, and I noticed 2 or 3 of them had for sale signs on them, just in today when I went by. So that was kind of just that I wondered about that, right? Because if they don't have a regular renter and their whole business model and purpose was for these higher ratio rents that they could get from short-term rentals, suddenly the math doesn't work if they're, empty for large periods of time, or they have to just rent it to a regular person. The yield on a regular long-term lease was lower than these periodic rentals. So that really impacts cash flow. And when these properties were purchased highly levered or with a required yield in mind, the math all falls apart. So what you're also seeing, and this is the next big wave, is this exodus of people from high population centers like Toronto and New York and all these very popular spots where everyone thought it was great to live in boxes on top of each other, so long as you could spend the bulk of your time in offices and in parks and bars downtown and, sort of not much in your actual abode. But now we've got this abrupt change in awareness. And you're seeing an exodus, for example, of the wealthy people who are saying, I'd really like to have a spot up north. So we're seeing a lot of demand in cottage country just north of me and around where I live, where they're sort of, let's leave the big city and either sell there completely and move to further north where I have some green space around me and costs are probably less. And also the boomers are wanting to take some money out to have in this low rate environment. The math is shocking how little you can actually take off your savings now. So it's impacting on all these different levels. And the main theme is people are either renters are leaving the downtown core of major centers, and so you're seeing this huge flood of vacant properties, which is causing the investor class to sell or try and list these properties, which is increasing the volume of available properties, which is suppressing both the price of rents and the price of the properties. So it's really this whole cycle that's been started. You could see that this was going to be the case. For some catalyst was going to start this process. You could see that for the last several years because it had gone so far in the one direction. But I think it's well and truly here now for the foreseeable future. And again, with the aging demographic and with the rates being as pathetic as they are, for many years, a person, if they could retire with $1 million, they could get a guaranteed income off that of about $50,000 a year. Today, if you think about where the rate structure is, you're lucky to get a guaranteed income of $10,000 a year off $1 million in capital. Like, it's really turned everybody's expectation about what costs they can afford in retirement completely upside down. And it's going to cause a lot of rescaling of all these structures like overhead and how many properties a person has. And it's going to be a consolidation of that where everyone's looking for a more efficient option. So I think that it's good in that it's suppressing the rents because rents were too high relative to income. Canada had the highest rents relative to income and prices of properties relative to income of any country in the world by international studies a couple of years ago. So that was always going to be sort of a bug looking for a windshield, and I think that the pandemic has really presented that.
Danielle, thank you so much for chatting with us.
Hey, thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. If you have any questions for Danielle or any of our other guests, you can send them to info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.